Hi, this is Frank Cappelleri from CappThesis. Today, we'll be looking at the relationship between the S&P 500 and the HYG High Yield Bond ETF in a report from June 27, 2023. And if you like this content, give it a like and subscribe, and you'll be notified whenever we put out a new video. So here's the first chart, and this is just the S&P 500 here in blue and HYG ETF in red. And as we know, a lot of times that when we see weakness in credit, it sometimes gives us an indication that the same thing will happen in equities. And really, that was the case here at the end of 2021 when HYG started to move lower as the S&P was still moving higher here. That didn't matter, of course, until the beginning of 2022, and then they both started to move down in unison in a pretty aggressive manner. And of course, that didn't stop until the lows in October here. And on the bottom is just a relative line of HYG versus the S&P 500. And again, we saw that HYG was underperforming the S&P for a good amount of time before the S&P responded. And then as I moved lower, we see that this relationship was just really a sideways direction movement here for most of the time. Now, that has changed in 2023, especially near the March lows for the S&P 500 as things extended now over the last 3 months or so, as the HYG ETF, though, has not followed suit, topping out really at the beginning of this year and making lower highs after that. And as we see here, the relative line has really dropped off from, again, March till now. So the question is this now too oversold? And does the S&P need now come back in again and really align itself better with HYG, basically mean, rollover? So let's look at this from a slightly different perspective. Now bringing it back again to the beginning of, or right near the COVID low here. S&P in blue. Now we have the relative line here in red. Right? What does this show us? It shows us that from the low in 2020 all the way to the high in 2021, S&P was moving higher. And during the entire time, the HYG versus S&P 500 relative line was moving lower, right? So really, in the best of markets, this is what you want, but the S&P to outperform high yield bonds. Now, when does that matter again? When things start to roll over. And we can see now that the 14-week RSI of the relative line has been oversold now for a few weeks. Again, does that tell us that, it's too overdone? The S&P need to catch up? Maybe, but look at how much it stayed oversold, or at least underneath this midpoint of the indicator during this big period here. So, it may give us an indication of something, but it is definitely not something that we should be overly concerned about just yet, because we know how things have gone, or at least during the period from 2020 to 2021. Now, zooming way out, taking this back to now the end of 2011, beginning of 2012, again, the S&P has been in rally mode most of that time. And look what HYG versus S&P 500 has done during that time. Straight down. Again, periods of time when it has rallied, and meaning that HYG is outperforming the S&P, and that also means the S&P has underperformed. But going back now, again, over 10 years, HYG versus S&P 500 lower, S&P 500 itself higher. So should we not be concerned at all about credit? Of course not. If we have a credit crunch, things like that, that's always going to be an indication that things can get worse. But just because HYG is underperforming the S&P 500, just that does not tell us that things are about to worsen. How will we know? Looking at the S&P 500 itself, we know what that's been about this year, making higher highs, higher lows, bullish patterns being taken advantage of, and most recently in the second quarter, a lot fewer big 1% moves both up and down. If any of those change, then we could be concerned about the S&P's character changing for the worse. Until then, we'll look at the HYG, pay attention to it, but in the end, look at the S&P's price action, and that's going to be our biggest indication, as it always is. So to read this full report and many others like it, please visit CappThesis.com and sign up for a 30-day risk-free trial. See you next time. Thank you.